Good morning, students. Welcome back to the session on advanced accounting. So today we are going to continue with our discussion on the accounting standards, and we touched upon accounting standard number 19. So today we are going to continue with that discussion, AS 19. Let us just quickly do a recap of whatever we discussed. There were few terms we discussed, and in relation to those terms, I told you that these terms will become the basis for the purposes of our understanding of this entire standard. So quickly, there are two parties. One is the lessor and second is the lessee. Who is the lessor? Lessor is the one who owns the asset and he transfers the right to use such asset to the lessee. Lessee, in other terms, you can also say is the tenant who gets the right to use the asset from the lessor. Now, in relation to this, lessee is required to make a payment to the lessor. Now, this payment could be on a quarterly basis, monthly basis, annual basis. Generally, you find this to be on a monthly basis. And this entire arrangement between the lessor and the lessee is for a certain period of time, which is fixed, which cannot be terminated without termination penalty. And that period is called as lease term, or you can say lease period. Okay, yeah. So these were some of the terms we discussed. Now we move on to the next part. In relation to leases, we can say two types of leases currently exist. Or you can say leases can be of two types. So let's understand about those two types of leases. First is operating lease. Sorry, I'll put it as finance lease first. First is the finance lease, and second is the operating lease. We'll talk about these two leases now. In relation to both these leases, before we get on to the detailed understanding the meaning of these two types of leases, let us first of all understand that depending on the type of lease it will be, accounting will vary. And when I'm saying accounting, I'm talking about accounting requirements of lessor as well as lessee. Means accounting requirements of lessor and lessee will vary depending on the type of lease it is. So this means if it's a finance lease, accounting of lessor will be different from the one that lessor will do in case of operating lease. Okay, and if it's a lessee, then the accounting which lessee would do in case of finance lease will be different from what he would do under operating lease. Yeah. Okay. So now, in relation to finance lease, first of all, let's understand what do we mean by finance lease. Finance lease is the lease wherein risks and rewards associated with the asset, yeah, get transferred to the lessee. I'm repeating this point. Risks and rewards associated with the asset get transferred to the lessee over the period of the lease. And if you can draw some correlation to this concept, we have already talked about transfer of risk and reward. Yeah, we have already talked about transfer of risk and reward. Can you tell me where was this concept discussed? Quickly, over to you. Can you tell me where did we discuss this concept? Transfer of risk and reward. This concept I'm just discussing once again with you over here. But prior to this, in our standard, we have already talked about transfer of risk and reward. Can you tell me which standard was that? Yes, I'm waiting for a response. Anantaraman is saying in AS9. Very good. So now, in AS9, when we discussed about transfer of risk and reward, that was for throughout the life of the asset. Okay, or you can say if it's a car which is sold, then the risk and reward associated with the car get transferred to the buyer forever. But over here, we are not transferring this risk and reward forever. It's only for a certain period of time. And what is that period of time? Lease term. Yeah, so that's the main difference between these two. Okay. Now, let me just take one example, and then you need to tell me that whether it would really make a difference or not. Okay, in terms of structuring of these two transactions, I'm repeating. There are two transactions which I'm just putting down now. You need to tell me whether you see any difference in terms of structuring of those transactions. Okay, yeah. And in the meantime, I can see a lot of responses from Sanjay, Sakshi, Kamal, Rama, Anushka. Very good. They are saying it's in case of AS9. Same is from Manish, Namrata, Ayush, Priya. Very good. Okay. So now let's look at two situations. Laptop, yeah, is sold by A, and who is getting the laptop? B. Yeah. Another scenario. Laptop given on lease by C to D. So let me just make it once again A to D. Over here, the lease period is, say, 3 years. Yeah. Now, in terms of structuring of these two transactions, you need to tell me, would it really make a difference whether we structure it like a sale or a lease? The reason being why I am asking this question is, you can say that the effective life, so there is no terminology as such effective life. I am saying effectively, if you use a laptop today, it is usable generally for a period of 3 years only. I am not talking about the useful life. I am also talking about the economic life. Generally, what would you expect? You will expect the laptop to be usable only for 3 years. Yes or no? Yeah. Considering that situation, tell me, will it really make a difference whether a transaction is structured like this or this? Quickly. Kushi is saying, so the first one is sale and the second one is lease. No, this is true. And we all understand this. I'm saying, does it really make a difference as regards the structuring of the transaction? Means, whether we call it a sale or a lease, do you think it will make any difference to A or any difference to B or D? Quickly, your thoughts. Yes. waiting for a response. Just think about it and let me know. Yash is saying there is no difference. Can you tell me, Yash, why you are saying there is no difference? Rama is saying risk and reward, but he is not clarified. Kamal is saying if anything happens to the asset, different persons will be liable. No, I'm not talking about different persons will be liable. You can say that one is the seller, second is the buyer, and of course, one is the lessor, second is the lessee. So, of course, parties are different, but I'm saying in terms of structuring, do you see any difference? Anandraman is saying no, there is no difference. Priya is saying it could be because of certain terms like warranty. Jamil is saying yes, sir, there would be a difference. Payment would be installments, and first one is a one-shot payment. Okay, but lease can also be a one-shot payment. It's not necessary to be a monthly payment in case of lease. She is saying that the difference is transfer of property right, ownership. Okay. Anushka is saying it will make a difference because in sale we transfer our ownership, but it's not the case in case of lease. Christina is saying it appears to be similar. Sanjay is also saying it appears to be similar. Ramakrishna is saying, so in case of the second transaction, risk and reward is transferred only for 3 years, whereas it's permanent in case of end. Okay, very good. It's good you shared your thoughts, and I can see a lot of other responses also coming from Sakshi, Ridhima, Kamal, Rupasmita, Pallavi. So Rupasmita is saying ownership is transferred, but in case of lease, it's not done. Okay, great. So one difference which many of you pointed out is about ownership. In this case, ownership is getting transferred, but in this case, ownership is not getting transferred. Okay, yeah. Now let's suppose if it was about you being involved in a transaction like this. Let's suppose if you were given an opportunity to get a laptop from A, say instead of B or D, it's you. And you know that effectively any laptop today can be used only for 3 years. After that, it's useless. Why? Because effectively it will be getting all the wear and tear which it will have. Okay, the usability will go down, the technology will get upgraded so significantly that the laptop will not be of much use after 3 years. So in such a scenario, even though you will not be getting the ownership, but still you are enjoying the possession of the asset, because who is having the asset? We, or you will be getting the asset. Secondly, you will have full rights to use the asset as per your use. Yeah, but the only difference would be that if you purchase this, then you will be required to make a single short payment, which is generally the case in case of a sale. You will be required to pay everything upfront. But in case of a lease, generally, what will you be required to do? You will be required to pay for this money on a monthly basis over a period of 3 years. Correct? So it's a period of 3 years. I'm talking about the life. So the payment is made upfront. In this case, payment is spread over the period. So it becomes easier for the other party, that means the one who is getting the laptop to use. It becomes easier for this party to make the payment. Yes or no? Yeah? Tell me, do you think it's something which is easy for the other party to follow? Now, why are we discussing this structuring? This is because of the fact that when it comes to a finance lease, standard says in case of a finance lease, all the risks and rewards of the laptop should be transferred by A to D, which would also happen in case of a sale. Then how is this finance lease different from sale? The difference is the ownership. In case of a lease, ownership will not get transferred. But why would somebody enter into a finance lease instead of a sale? When he is enjoying the risk and rewards, let's suppose if I am D, I am enjoying the risk and rewards related to this laptop, then why would I not want to have the ownership at the very beginning? There are a couple of reasons for this. First, by getting the ownership at the very beginning, I don't see that to be of much use. Why? Because even if the ownership stays with A is bound for a period of 3 years because my lease term is such that he cannot back out. Number two, for me, today cash flow is the problem. I don't have the money to make the payment upfront. So that's why, what did I do? I entered into a contract with A for a staggered payment. So I'll be making the payments over the period of 3 years. So in other words, if you can just logically think about it, it's a kind of financing arrangement for me. Yes or no? It's a kind of financing arrangement for me. Why? Because I'm getting the laptop, I'm also getting the risk and rewards attached to the laptop, and over and above this, A is allowing to pay me for this laptop over a period of 3 years. Effectively, it is no different from a sale. Because after 3 years, let's suppose if I was to give this laptop back to A, what will he do? He will have to scrap it off. Why? Because it's of no use. Because all the economic benefits which were attached to the laptop were available for 3 years, which I have consumed. After 3 years, even if I give it back to A, it will be only a scrap item for A. Understood? Understood the rationale, understood the logic as to why finance lease is structured like this, and why somebody would not enter into a sale. Yeah? Clear on this? Now, there are few things which are attached to this, so that's why it's very, very important to understand the rationale which is important. And clear about the rationale? All of you? Okay, great. Now, so far, the things that we have discussed were all logical, which is trying to understand the concept of a finance lease. Why did this concept came? How does it really help the other party who is getting the laptop or getting the right to use the asset? Let's now try to understand about this finance lease as to how this can be structured. And how do we identify whether lease will be a finance lease for profit? See, the moment the terms of the arrangement reflect that the risks and rewards, or you can say substantially all the risks and rewards are transferred to lessee. In such a scenario, you will call that lease as a finance lease. Jamil is asking, sir, what will be the benefit to A in case of a finance lease? A will get the money. What's the objective of A? In the first option, that was to sell and get the money upfront. The second option to sell or to lease and get the money over the period. So A is earning out of this arrangement. Objective of A was to earn, which he is doing. In one case, he is getting money immediately. In second case, he is getting a payment over the period. Manish is asking, sir, in hire purchase, there's no life of assets, but in lease, we see life of assets. I don't think so. It is both. It is same at both the places. Okay, so now I'm saying, in case of finance lease, what is it that you need to check? That whether the risks and rewards attached to the asset are substantially transferred to the lessee or not. If yes, it's a finance lease. Otherwise, it will become an operating lease. So what is an operating lease? The one which is not a finance lease. So the definition of operating lease is very, very simple. Its definition simply says that any lease which is not a finance lease will become an operating lease, and which also conveys that we need to check at every point of time whether a lease is a finance lease or not. Means we do not have any way to directly check about operating lease. To check about operating lease, we will have to check whether the lease is finance lease or not. Correct? For which this is the concept which is involved, risks and rewards. Yeah. Now question may arise and you may think, sir, how do we identify? How do I identify that whether the risk and rewards or substantially all the risks and rewards which are attached to the asset have been transferred to the lessee or not? So for this, you don't need to worry. For this, standard is there to help you. Let's understand. Standard is there to help you for this. Standard says that for you to identify as around the transfer of risk and rewards from the lessor to the lessee, there are few indicators. Standard gives you few indicators, or we can say standard gives you 5 indicators plus 3 additional indicators. So all in all, standard is giving you 8 indicators. If any of those indicators exist in the arrangement, I'm saying if any of those indicators exist in the lease arrangement, it would become a finance lease, otherwise do not. So let's understand those indicators one by one. First, ownership transferred to lessee at the end of lease. So what do we mean by this? Going back to our example of A to D. Arrangement is for 3 years. Lease terms say that after 3 years, ownership of the laptop will get transferred to D. Till 3rd year, ownership will continue to remain with A. But after 3 years, what will happen? It will go to D. So can you now see any difference between a sale and a finance lease? Effectively none. Because what is happening? D is enjoying all the benefits of laptop over 3 years. After 3 years, when he should have returned this laptop to A, lease term says no. Now after 3 years he will not return. Its ownership will come to you. Ownership will not come on day 0 to D. No. It will come on end of the lease term. So effectively, it implies what? That the risk and rewards have been transferred to D. It's just that it's been colored in a different manner. What's been the intent of these two parties? If they will structure any such arrangement, intent is very clear that who should have the risk and reward? D. It's just that they didn't want to color it like a sale. So that's why they have structured this in some legal form. But does it really matter to us? No. For us, if this is structured like this, it will become a finance. Yeah. So this is the first indicator. Second indicator. Second indicator says at the end of the lease term, lessee will have an option to buy the leased asset. Option to buy leased asset at a value which is below market value at that point of time. Okay. But when will this option get triggered? At the end of the lease term. At the end of the lease term only, not before that. Now here again, if D is given an option that after 3 years, after using this laptop, if D wants, he can also buy. And he can buy this laptop at market at a value which is below market value. And that value is also fixed at the time of inception of the lease. So what does it indicate? Once again, that the risks and rewards have been transferred to D at the very beginning. And please remember that all of these indicators we have been discussing, when do we need to check it? At the time of inception of the lease. We will not check it at the end of the lease term. No. At the time of inception of the lease. Okay. Clear? Yeah. This option is also called as bargain purchase option. Bargain purchase option means option to buy at a value lower than the market value at the end of the lease term. But this option is available with the lessee, not with any other party. Number 3 indicator. Indicator number 3. Lease terms substantially covers economic life. Lease term covers substantial economic life of the leased asset. Means, if we look at the laptop, we would say its economic life is 3 years, after which it is not usable. And the lease term is also for 3 years. So what does it mean? It means that entire economic life, or over this entire economic life, all the benefits which are attached to the laptop will be Availed by whom? Lessee only. So in a way, here again, what seems to be the intent in the arrangement? Intent seems to be the transfer of risks and rewards to the lessee and not to the lessor. Okay, clear? Indicator number 4. All of these are the indicators. Indicator number 4. And if you want, you can also refer to this page. Page number 1.74. Indicator number 4. Leased asset is of a specialized nature. Leased asset is of a specialized nature. Which only lessee can use. Say lessor has bought an asset which is usable only by lessee and no third party. Means that was structured specifically for lessee only. If lessee will not use that asset, it will not be usable at all by the lessor. And lessor will also not be able to give it to some other party. Why? Because this is specialized, customized, tailor-made for D only. In this case, will it be possible for the lessor to go to any other party other than D? No. And over the period, in relation to this asset, all the economic benefits which will arise out of this asset, who will get those? Or who will be able to get those? Only D. So that's why here again, what seems to be the intent which is involved in the arrangement? Risk and rewards. Means the transfer of risk and rewards. Clear? All of you? Yeah? So this was the 4th indicator. 5th. Present value of minimum lease payments. Minimum lease payments, you remember lease payments, we talked about lease payments. Lease payment means payments which are given by lessee to lessor. So we are saying minimum lease payments. Means the minimum number which has been agreed between them. We compute its present value. So the present value of all the lease payments is substantially equivalent to fair value of leased asset. Harsh is asking, sir, which topic you are teaching? So Harsh, we are discussing AS19. It's quite surprising. Maybe you've just come in. Is it? Okay. So we are talking about the 5th indicator. 5th indicator involves bit of arithmetical calculations which you will also be required to do significantly in this chapter and in this standard also. It says that all the payments which are made by D to A, let's suppose D is paying 1 lakh in the first year, 1 lakh in the second year, 1 lakh in the third year. All in all, 3 lakh is the amount which D will pay to A. So we need to compute its present value. So we will compute its present value. Why I am saying present value? Do you remember this concept of financial management? I'm sure you would have covered financial management and you would be knowing the concept of this financial management about present value. What do you mean by present value? What do you mean by future value? Can you all confirm quickly? All of you? Do you know the meaning of present value? Do you understand this concept of present value? Quickly. I'm not asking you to comment on its computations. No. I'm saying, do you know this concept? Quickly. Yes. Waiting for a response. Do you understand this concept or not? Quickly, please confirm. Okay, Manish is saying yes, sir. We understand this concept. Very good. What about others? Great. Jamil and Kushi are also saying yes. Kushi is saying at foundation level we did this. Very good. What about others? So it appears all of you know about this concept. Yeah? Very good. Same as the case of consumption. Great. Okay. Sushi, Rama, Anandraman, Manish, they are saying yes, we know this. Sushi definitely will come to its explanation also. So now we are looking at the present value. Present value means the value which is required to be paid after 1 year is what? 1 lakh. So if we have to compute its amount equivalent to today's date, we are on today. Today the value of 1 lakh will not be 1 lakh. Why? Because over a period of 1 year, time value of money would have been built up in that. Yes, time value of money would have been built up in that. So if we have built up time value of money in this case, what would be its present value? Its present value will definitely be lower than this. Similarly, 1 lakh which is payable after 2 years involves greater time value of money. So what is it that we are supposed to do? We are supposed to compute their present values. Let's suppose their present value comes out to 2.5 lakhs. It's only in the example. Please don't get into its computation. Huh? Don't think, sir, how did you compute this? I'm saying, let's assume the present value of these 3 payments of 1 lakh each after year 1, year 2, year 3 comes out to 2.5 lakhs. So what do we call it as? Present value of minimum lease payments. Next, point number 2. What do we need to compute now? Fair value of the leased asset. Okay. Now which asset is involved? Laptop. Let's suppose if we have to check its fair value, what did we find? We find its fair value to be equivalent to 2.25 lakhs. Its fair value is what? 2.25 lakhs. Now in this case, or let me just put it as 2.75. You might be thinking, sir, how can laptop be so expensive? It may be. And anyways, this is only an example. Now in this case, the fair value of the asset is 2.75. And effectively, if we remove the time value of money, of course, A is getting more. If A were to sell this asset, A would have got 2.75. But instead of selling this asset, A is giving this on lease and earning 25,000 extra, isn't it? A is getting 3 lakhs, getting 25,000 extra. What does that indicate? Time value of money. Because this staggered payment, A is getting 25,000 more. But we are removing this amount of time value of money. We are comparing it today. So today, if we were to compute its present value, it comes out to 2.5 lakhs. So if we look at the situation of D, D is effectively paying the amount of the fair value of this asset. Yes or no? Yeah. D is paying the amount of fair value of the asset. It may not be exactly same, but this is substantially equivalent to fair value. Now, what do you mean by this? This has not been defined anywhere in the standard. Now, this substantially could be 80%, this could be 90%, this could be 95%. This is judgmental. And for you, don't need to, all of you don't need to worry in the exam. In the exam, you will be told whether it's substantially equal or not. But practically, when you will apply this concept, this is judgmental. You will have to think through. You will have to assess that in the given scenario, will you call this as substantially equal or not? Generally, something which is greater than 90% is considered to be substantially equal. Okay? Yeah? Clear on this? Clear on the fifth indicator? Yeah? Okay. Now, in this fifth indicator, again, what do we understand? That effectively the risk and rewards have been transferred. Here again, we get the same understanding. Okay. After this, standard gives you 3 more indicators. I'll just quickly read out because they would also be in line with the sort of concepts we have discussed. Let's suppose if the lease is cancelled before the term, who will bear the loss? Lessee. If the lessee wants lease term to be extended, he can get this extended, and in this extended period, the lease rentals will be significantly lower. If there are any gains or losses from fluctuation in residual value, they will accrue to the lessee. All of these things indicate what? They indicate that the risk and rewards are in a way transferred to the lessee. Okay. And the moment we say risk and rewards have been transferred, we will call it as finance lease. In case it's not a finance lease, then what do we call it as? Operating lease. So let us just take one more example. Say A has given a car on lease to C. A has given a car on lease to C for a period of 2 years. This is the period of lease. Now, what do you call this type of lease as? Will you call this a finance lease or will you call this an operating lease? Quickly, over to you. Quickly, over to you. What do you call this finance lease? Sorry, this lease as? Quickly. Will you call this a a finance lease or an operating lease, and why? Yes, I am waiting for a response now. Over to you quickly. What do you call this type of lease as? Finance lease, operating lease, and why? Anantraman is saying it's an operating lease. Ayush is saying it's an operating lease. Yash is saying it's a finance lease. Nobody has given the reason. It will be great if you can just also briefly give me the reason. Ramakrishna is saying operating lease because it doesn't substantially cover life of the asset. Sanjay is saying operating lease. Rupasmita is saying finance lease. Sushil is saying car on loan finance lease. Okay, so I can see mixed responses so far, but without reasons mostly. Manish is saying operating lease. Christina is saying it's an operating lease since the lease term and the economic life are not same. So they don't need to be same in case of a finance lease. I'm not sure why you're saying they need to be same. Ramakrishna is saying lease term is substantially not covering the economic life of the asset. Hence, it's an operating lease. Very good. What about others? Anushka is saying there's no substantial transfer of risk and rewards. That's why it's an operating lease. Excellent answer. Ayush is saying operating lease because not for a long period. Manish is saying it's an operating lease because it doesn't substantially cover the life. I think during the course of your assessment, you have all been busy checking only one indicator, which is not appropriate. Please remember, we talked about 8 indicators. Yes or no? And over and above indicators, we talked about the basic concept, which is involved in case of finance lease and operating lease. What was that? Transfer of risks and rewards. What do we need to assess? Whether the transfer of risk and rewards has taken place or not, for which standard gives us the indicators. Indicators are not an exhaustive list. They are only indicators to help you. That doesn't mean that we will remain limited by those indicators only. We may have to go beyond that. But anyways, at your level, you can just stay limited to indicators also. But in this example, at least apply all those indicators. You can't just say that you will check the indicator of economic life only and conclude it. That may go wrong. So the first indicator was, is there any transfer of ownership to C? No. Is C getting any option to buy the car at the end of the lease term? No. Does this lease period substantially cover the economic life? Again, no. Is this car of a specialized nature? No. Car can be used by anybody. Fifth, that is about present value of minimum lease payments, but we don't have the numbers to compute it. So that's why we will ignore that. So any of the indicators are not taking us to finance lease. Therefore, what do you call it as? Operating lease. So which type of lease this would be? Operating lease. Clear? So again, I'm not sure why many of you answered finance lease. To my surprise, you need to just go back to those indicators quickly and reassess this and then confirm. Are you now clear on this concept or not? In the meantime, Pranav, Sakshi, Nakul, they mentioned it's an operating lease. Dishya mentioned it as a finance lease. Namrata was also saying it's a finance lease. I think you would have understood whether it's a finance lease or an operating lease and why. Okay, all of you clear? Quickly, are you clear on this concept now? Yes, please confirm. Are you clear on this concept now? Anushka is clear on this. Yes, quickly. If you have any questions, any doubts around this, please let me know. Then I'll move further. Okay, great. Priya, Manish, Divya, they are clear. Sakshi is saying all indicators have to be specified. No, any of the indicator if specified will make it a finance lease. Okay, Jamil is also clear. Okay, great. So now there are two things on which we'll focus. Okay, and I need your attention now. I'm sure you are attentive, but this is slightly complex, or you can say at times it may become slightly complex. So that's why I need your attention. So I'm just giving you the flow of this tender. This will help you to understand as to how we are moving in this tender. In this tender, there are two parties whose accounting is required to be checked. Lessor and lessee. Okay. So first of all, what do we check? Whether a lease is a finance lease or an operating lease. This is something we have done. Now we know whether a lease will be finance lease or operating lease, and this will remain same. Whether you look at it from the perspective of lessor or lessee, same way you'll have to check, because the contract will be one between two parties. Once you are done, the next step will be to get on to the accounting requirements. Accounting requirements means how will the lessor record this? How will the lessee record this? Okay. Accounting requirements of lessor and lessee would be different. First. And accounting requirement for operating lease and finance lease will also be different. So that means 4 types of accounting requirements are required to be understood by us. What are those 4 types? Let's suppose the lease is a finance lease. Then what will be the accounting of lessor? Number 1. What will be the accounting of lessee? Number 2. Let's suppose the lease is operating lease. Then what will be the accounting of lessor? Number 3. What will be the accounting of lessee? Number 4. Okay, yeah. So we can say 4 types. depending on the type of leases, means finance lease or operating lease. And before we get on to the accounting requirement, when we are assessing whether it will be a finance lease or an operating lease, there are certain calculations we may be required in relation to those indicators. Okay, for this we need to assess indicators. All of these indicators you will be able to check theoretically. Arithmetical computations may not be involved except in case of one indicator. Which one is that? Fifth indicator, wherein you need to compare present value of MLP with fair value of leased asset. Yes or no? Yeah. So now, every time you will be required to check whether it's a finance lease or operating lease. If the question will provide you this information of MLP, fair value of leased asset, then you will have to do some sort of arithmetical calculations. Yeah. So your chapter, this standard means your chapter is focused on these areas. One, this indicator and the arithmetical calculations which are involved in this. And second is the accounting requirements of formats. So I'm saying your chapter is focused on these requirements. Understood? What is it that we need to cover? Okay. Now, in relation to this indicator, we will now start. So that means now the discussion that we are going to start with, and we will do it for some time, will be all focused on this indicator. Okay, clear? For this indicator, two things are required. Fair value of asset, present value of MLP. Fair value of asset will always be available to you in the question. You will not be required to compute this. So that's why I will take it out. I'm not discussing it. It will be available to you in the question. MLP. Now this present value of MLP again involves two concepts. One is to compute MLP and then to compute its present value. So basically again two things are involved. One is to compute MLP and second is to compute its present value. Yes or no? Correct? So let's now try to understand the meaning of MLP. Meaning of MLP. Now, meaning of MLP may vary depending on whether we are looking at it from the perspective of lessor or lessee. So MLP includes lease payments. No doubt, it would include lease payments, which the lessee is required to pay to the lessor over the lease term. Secondly, to this, what do? We will add any residual value guaranteed by or on behalf of lessee. any residual value of asset guaranteed by or on behalf of lessee. Okay. Third, this will also include any residual value guaranteed by any other third party. So there are three things you will include in case of MLP. Minimum lease payments, sheet. Okay. Lease payment, then the residual value which is guaranteed by the lessee or on behalf of lessee, and residual value which is guaranteed by any other third party. See, whenever you will be checking the MLP from the perspective of lessee, you will add these two. In case of lessee, you will add these two. Means for a lessee, when you will check what is the MLP, you will add these two. But for a lessor, when you will check what are MLPs, you will add all three. So can you understand the difference? Means for a lessor, you will have to add this third item, which you will not do for a lessee. Now you will be thinking why? Why? Because for a lessee, if let's suppose in case of a car, lessee has taken a car on lease and its residual value is guaranteed to the owner of the car, to the lessor, say by any ex party, say by any party. So does it really matter to me as a lessee? No. For a lessee, what does it matter? Something which is guaranteed by the lessee only. But if any residual value is guaranteed in relation to that car, will that matter to the lessor or not? Of course, you will get the money. So that's why you will consider this only for lessor but not for lessee. Clear? Clear on this? Yeah? Clear on this? So we have discussed about MLP. Now we will discuss about present value of MLP. So let's understand this concept of present value quickly, because all of you know this. So that's why I will not get into too much details of this concept. Say if I pay ₹100 to a bank, if I pay ₹100 to a bank, it means I deposit ₹100 in a bank. So after 1 year, what would it become? Assuming there's a rate of 10%, 110. Correct? 110. After second year, what would it become? Again, taking a rate of 10%, can you tell me? 121. Why? Because 10% interest will now be taken on this. After third year, what would it become? Manish is saying, sir, where will he get it from? He will get it from anybody. Huh? He may get it from any party. Okay. Now, who can that party be? We don't need to get into this. Right? Now, after third year, what would it become? Again, 10% interest will be taken on this. So this will become 130. Yeah. So now, one thing that we understand is that an amount of rupees 100 will become 133 after 3 years, 121 after 2 years, 110 after 1 year. Why? Why? Because over a period of time, interest will get built. It will be loaded with interest. This is called as time value of money. Yeah. So, if I have to look at it in a reverse manner, if I say that 133 or an amount of 133 after the end of third year is equivalent to what amount today? So what is the equivalent value of 133 as of today? So what does it indicate? This indicates that from the future value, this is what? This is the future value. From the future value, we are bringing this amount to its present value. Or you can say, we need to unload the interest which is involved in this. We need to take out the interest portion from this. So what would it become? It would become 100. This would also become 100. This would also become 100. Yes or no? So these three amounts, now I'm talking about three different amounts. They all will become 100 today. Why? Because I will eliminate the time value which is embedded in those amounts. That is called as present value. Yeah. Now for computing the future value, what do we need? We need rate. Rate of interest. Correct? Similarly, for moving it back or bringing the future value to its present value, here again, what do we need? The rate of interest. Yes or no? This rate of interest, because we are computing the present value, which means we are applying the discounting technique. Discounting means bringing the future value to its present value. That is called as discounting. Therefore, this rate of interest is also called as discount rate. This is also called as discount rate. So that means whenever we will have to compute the present value of any amount, one thing which is a must is a discount rate. Without the discount rate, we cannot compute the present value. Okay? Clear? We cannot compute the present value. Clear? Yeah? Alright. So this was about the concept of present value. Now, all the MLPs that we will have, let's suppose in this year we have MLP of 110, in this year we have this, in this year we have this. So what would be the MLP in terms of their present value? That would be 100 plus 100 plus 100. So MLP in terms of their present value will be equivalent to 300. So we can say present value of MLP will be 300. Correct? Clear on this? Clear on this concept? This concept will be significantly used in this chapter and at some other places also. So that's why it's important that you understand this. And you may note down all of these points wherever you require. Fine? Yeah? Okay, so now we will move on to the accounting requirements under finance lease. So now we will look at the accounting requirements under finance lease. Okay, yeah. So that means for some time you should forget about operating lease. Now we are not discussing operating lease. Fine. And as we discussed that finance lease will involve two parties, lessee and the lessor. Yeah. So now we are starting with the accounting requirements of lessee. So we are starting with lessee first of all. So we'll now understand how will a lessee record a finance lease transaction. All right? Yeah. Here again, let's suppose we have a period of 3 years. 2, 1. 0. Now let's understand in case of finance lease what would happen. A is the lessor, B is the lessee. B is the lessee. Who owns the asset? A. Who has got right to use the asset? B. And who will get the risk and rewards attached to this asset? Can you tell me? Who will get the risk and rewards attached to this asset quickly? Who will get the risks and rewards attached to this asset quickly? Waiting for your response. Who will get the risks and rewards attached to this asset in this lease arrangement? Quickly, I thought we would be able to answer this quickly now. Great. Sakshi is saying B. Of course, yes. I'm sure many of you would have answered, but I'm yet to receive that. Okay, great. Sanjay, Khushi, they are also saying B. Very good. No, because it's B who will have the risk and rewards attached to the asset. That's why B will record asset in its books. And you may be thinking, how is it possible, sir? It's possible. In case of a finance lease, A will not record the asset. In any ways, we are not talking about accounting of A. We are talking about accounting of B. So B will record asset in its books. And on this asset, B will charge depreciation. As if he's the owner. That's true. But at the same time, please also understand that B will be required to pay the lease rents. Yes or no? B will be required to pay lease rent, lease amounts. So corresponding to this asset which B will record, B will also record a lease liability. So we will record asset, we will record lease liability in its books. And when will this recording be done? At the time of inception of the lease. And both these assets and liabilities will be recorded at what amount? They will be recorded at the lower of fair value of the leased asset or present value of MLP. Fair value of asset or present value of MLP. Lower of. This is what they will do. Okay. So now let me give you one example. Because I think with the help of example you will get the clarity. And let me just clarify one more point for you. That there are two ways to understand this concept. One way is that you note down the steps which are also given in the study material. In fact, I'll give you the page reference. Yeah. So if you go to this page, there are various steps which are written. You can just simply mug up the steps, keep following the steps, and your accounting will be done. The other way is, instead of just mugging up the steps, you can understand the concept which is involved, wherein it should become very, very easy for you to apply this whenever it comes. So I'm just trying that you understand the concept instead of mugging up the steps. Okay. So now I will take one example. Say at the end of every year, 1 lakh is required to be paid as the lease by B. Now we understand B will be required to do one thing. What? Compute its present value, its present value, and its present value. As of now, we have not discussed the computation, so please don't worry about the computation of present value. Let's assume this present value comes out to 2.5 lakhs. Okay. And let's suppose fair value of the leased asset was 2.75 lakhs. Now, what is the accounting entry that B will pass? Asset on lease debit. $2.5 lakhs to lease liability 2.5 lakhs. Correct? This is what we will be required to do. Yes or no? Now there's a problem in this. I'll show you what. Now I'm just taking it out. Now, because B will have the asset for 3 years. So what B can do is, B can charge depreciation on this asset for 3 years. So 2.5 lakh will be depreciated over 3 years. So 2.5 divided by 3. 2.5 lakhs divided by 3. 2.5 lakhs divided by 3. As a result of this, what will happen? Asset will become 0 in the books of B. After 3 years, asset will become 0, which is appropriate because after 3 years, this right to use is gone. But the problem is with the liability. let's try to understand the problem. Today, on day 0, B has recorded a liability of 2.5 lakhs. Correct? B has recorded a liability of 2.5 lakhs. So this was the depreciation. This is again the depreciation. This is again the depreciation. And I am talking about B only now. So today B has recorded 2.5 lakhs as a liability in its books. But if you look at this chart, over a period of 3 years, is B required to pay 2.5 lakhs or 3 lakhs? Quickly, tell me. Over a period of 3 years, B is saying that I have a liability of 2.5 and B has recorded full liability in its books. Today itself, on day 0 itself, B has recorded this full liability. But do you think it's the full liability which B will be required to pay? What's the challenge which is involved? How do you think this challenge can be managed? Sakshi, Kushi, Sanjay, they are saying, no sir, actual liability is 3 lakh over a period of 3 years. And B has recorded only 2.5 lakhs. So definitely there's a problem. Now how do we find a solution to this problem? Very simple. We will have to do something so that over a period of 3 years, B ends up paying 3 lakh. Only then he will be discharged from his liability, otherwise not. Correct? So now, what do we do? On this 2.5 lakhs, in this first year, we will build up interest. Why? Because this is the present value. So we will build interest on this in the first year. Let's suppose we will build an interest of, say, $20,000. Again, I'm just taking this amount on an ad hoc basis. I'm not looking at the exact calculation. So what is the accounting entry that I'll pass? You will say interest debit 20,000 to lease liability 20,000. As a result of this, what will happen? At the end of first year, my lease liability will appear at a higher amount. This will become 2.70 lakhs. Correct? This will become 2.70 lakhs. And what will be the consequence? The consequence will be that now from this increased amount of liability, I can pay first installment. Lease liability debited 1 lakh to bank. Because at every year end, 1 lakh has to be paid. Because of this, this will get reduced to 1.70 lakhs. Correct? Similarly, in the next year, again on this 1.70 lakhs, interest will be built up. Again, interest will be built up. And again, this installment will be paid. And we will get some returns. Again, interest will be built up. And again, installment will be paid. But the only thing is that we have to build up interest. We have to accrete interest. This is also called as unwinding of discount or accretion of interest. So we have to do this in a way so that this liability becomes zero at the end of the year. Means we need to find such a rate of interest so that this liability becomes zero at the end of 3 years. Clear? Clear on this? Yeah. All of you, if you have got any questions around whatever we have discussed so far, please let me know quickly. Because this was all about the accounting. In this case, we have discussed the accounting entries in the books of lessee completely. We have also discussed as to how the lessee will be recording all of these amounts in his books of accounts. Okay, Poonam is looking for a break. Poonam definitely will take a break. Please give me some time. Say maximum 2 to 3 minutes. Let us just quickly discuss your queries around whatever we have covered so far. Quickly. Manish is saying 2.5 to 3 lakhs will be of particular year's current cost. Let's not call it as current cost. Let's call it as present value. Manish is saying that this extra 50,000 lease liability is like interest suspense recorded at year 0. See, this 50,000 is not recorded at year 0. This will be recorded over the period of 3 years. Okay, and definitely this will be recorded as interest. Khushi and Anushka are clear on this. Very good. Now, in this case, let me just quickly recap few things that we have covered. One is the concept of present value. Second is the accounting which lessee will do at the time of inception of lease. Third is the accounting which lessee will do over the period of the lease. Okay, and the fourth and the most important point, which we have understood, that whenever we will do this accounting, we have to make sure that we use such a rate of interest so that the lease liability becomes 0. This has to become 0 at the end of the lease term. It cannot be say based on any other concept. Yeah, Namrata, I'm hoping you are clear on this now. Yeah, so now in the books of lessee, year on year, what will happen? Asset will be depreciated and lease liability will be accreted with interest. So in the P&L of lessee, 2 items will arise every year, or you can say 2 charges will arise every year. Which are those 2 charges? Depreciation charge and an interest expense. These 2. Okay, clear on this? Yeah. Namrata, you are clear on this? Any more queries from your side on this? Okay, so let's also understand about this rate. See, in this example that I have discussed with you, I didn't use any interest rate. I just used the amount. Yeah. But in the exam, you will be required to use an interest rate, basis which you will compute the amount. Standard says that the rate which you will use should be the rate which is implicit in the lease. Implicit means built up in the lease arrangement. In this case, over a period of 3 years, 3 lakh is required to be paid, which is discounted to today's date at 2.5 lakh. And if this 2.5 lakh has to become 0 at the end of 3rd year, the discount rate that you compute will be called as interest rate implicit in the lease. Means use that rate of interest using which your installment. What is this lease payment? It's nothing but an installment. And if you see, it's no different from a financing arrangement. Actually, this is what you do in case of financing arrangement. It's a kind of loan at the beginning of the year, on which you are paying interest. Yeah, on which you are paying interest as well as principal. Every year you are paying interest and principal and you are getting your closing balance. And you are making sure that your loan becomes nil at the end of the day. Yes or no? So look at it from the perspective of lessee. Lessee has actually taken a loan, which he is repaying over the period and on which he is paying interest. So this interest, which is required to be computed so that the installment becomes nil, is also called as interest rate implicit in the lease. Clear? Yeah. After the break, now we'll take a break. After the break, we will try to understand how do we compute such interest rate. So far, we have not discussed about computation of interest. We will discuss that after the break. Okay? Clear on this? Yeah? Jamil is saying, sir, whether this discount rate will be given in the question or we will have to guess. See, first of all, you cannot guess it. So guessing is not the thing which you will be required. Either it will be given in the question. Mostly it will not be given in the question, in which case you will be required to compute. You will be very lucky if you are not required to compute this. Because in that case, the question will be a small one. Generally, this will not be given and you will be required to compute this. But you will not be required to guess it. You will have to compute it. And we'll understand the technique for its computation. Okay? Yeah? So let's take a break now. After the break, we will start with the computation of this discount rate. Yeah? Hi, welcome back. So we can now continue with our discussion. So we were talking about the interest rate or the discount rate, which we may be required to compute in the question. Okay. I think we can pick up this example number 1 on page number 1.76 to understand how do we compute the discount rate in case it's not there in the question. So all of you, if you can go to this example number 1 on page number 1.76. Yeah. Annual lease rents at the end of each year are 50,000. Lease period is 5 years. Guaranteed residual value 25,000. Unguaranteed residual value 15,000. Fair value of the asset at the inception of the lease is 2 lakh. So the period is 5 years. Every year 50,000 is required to be paid. 50,000 and then again 50,000 and then 50,000 then again 50,000. Just give me 1 minute. Yeah, sorry for this interruption. 50,000 per annum, guaranteed residual value 25,000. Okay, so 25,000 is guaranteed. For the time being, unguaranteed residual value we don't need to consider. Why? Because only the guaranteed residual value has to be considered. Fair value of leased asset is what? 2 lakh. 2 lakh is the fair value of the asset. Interest rate at which this discounting has to be done is missing from the question. Now, in the question, all the facts are available except the interest rate. So, what do we do? How do we find the discount rate? Okay. So, whenever we have to compute the discount rate, there's a technique which is called as trial and error method. There's a technique which is called as trial and error method. You have to follow that technique in the exam because if you want to compute this on Excel, then there were certain ways available. Yeah? There were certain ways available in the form of, you can say, goal seek formula, etc. But in the exam, you will have to compute it using trial and error method, wherein we will start by taking any discount rate. So you can guess any rate. For example, like Jamil mentioned, so do we need to guess it? Yes. Guess it in the exam. Any interest rate. Assuming that to be the rate which is the discounting rate. Assume that. So in the question, we have assumed a discount rate of 10% first. So here, we are given 5 years. 1, 2, 3, 4, 5. And what is the amount of MLP? MLP is 50,000. Then again it's 50,000. Then again it's 50,000. then again it's 50,000. And after that, in the MLP, RGB is also required to be added. Yeah, RGB is also required to be added. So we'll add the guaranteed residual value. Just give me 1 minute. So we will add the guaranteed residual value. $50,000 plus 25,000. So in the fifth year, we have two amounts. I've put down those two amounts separately. In the question, if you look at the study material, 15,000 has also been added over here. If you look at this amount of 15,000, what is this? This is unguaranteed residual value. Okay. If you look at the MLP, in case of lessee, what do? We include only the residual value which is guaranteed by or on behalf of the lessee. Yeah. So this residual value which is unguaranteed, it's been assumed, it appears it's been assumed that it's the value which is guaranteed by third party on behalf of the lessee. So that's why we are also taking it for the time being. Okay, understood? Yeah. You may or may not take it. As I told you, you may decide to take it or not, which is again up to you. Okay, in the answer, it's been assumed that this 15,000 is again a residual value not guaranteed by the lessee but by a third party on behalf of the lessee. So that's why it's been taken. Next is the PV factor. What is this PVF? Present value factor using 10% as discount rate. PV factor using 10% as the discount rate. Okay. Now, PV factor in the first year, what will it become? 0.909. Now, I am not getting into the technique of this computation because there is something all of you would know. Yeah. Then we have 0.826. Then we have 0.751. 683, and then we have 621. So how do we get the present value? Present value will be MLP into PV factor. So this is A, this is B. This will be A into B. So what do we get? 45,450. Number one. Then we get 41,300. You may also compute this and start sharing your answers. That is 7,550. Then we have 34,150. Then we have 31,050. Then we have 15,525. Then we have 9,315. Yeah. So all in all, what is the value we are getting? 2,14,340. Okay, so this is the value we are getting. 2,14,340. Now, ideally, my present value should have been equivalent to the fair value. If my discount rate was correct, then this value would have become 2 lakh. I wanted a discount rate so that this present value becomes 2 lakh. But unfortunately, I didn't have the exact discount rate, because of which my present value became higher than what is required. So that means 10% is not the correct discount rate. Okay? Yeah? So now I want to bring this value down. I want to bring this value down. So for reducing the present value, what do we need to do? Increase the discount rate. Because if we increase the discount rate, value will go down. It's mathematical only now. So now, once again, I will guess interest rate. So first of all, I considered 10%. Now I will guess another rate of interest, 14%. And you will be thinking, sir, why 10%, why 14%? It can be any rate. Huh? It is up to you. You need to decide. Don't think that it's a formula. You need to decide. You can take any rate. Okay, so now what will I do? I will now try again, because it's a trial and error method. So I'll keep trying till the time I achieve the desired result. So now using a discount rate of 14%, I'll compute the PV factor. So it's 0.877. Then we have 0.769. Then we have 0.675. Then we have 0.592. Then we have 0.519. Okay. And once again, what do I need to do? I now need to compute the present value. I'm hoping some of you would have already computed this. Sakshi shared the response for the previous one. Very good. And Anushka also solved this. Yes, quickly, if you can give me the answer for this one also. 43,850. Then we have 38,450. Then we have 33,750. Then we have 29,600. Then we have 25,950. Then we have 12,975. Then we have 7785. 7785. So now let's see what is the total present value I'm getting. 1,92,316. Oh, once again there is a problem. Once again I couldn't get the present value which I wanted. I wanted 2 lakh. But once again, it's not the same number. Khushi is saying with the answer rate, okay, Khushi seems to have computed the required discount rate. Very good. But I think we are a bit slow, so that's why it will take some time to reach there, Khushi. It's great you have computed this. So now, once again, there's a problem. Poonam is saying, sir, in place of 0.519, it's 0.621. Which one you are saying? This one? I think you need to recheck because this will only go down. It cannot go up. Yeah? Priya is asking, sir, how do we find these discount rates? It's only a guess. You can make any guess. First of all, 10% was a guess, then 14% is also a guess. The only thing is I increase the discount rate so that my present value goes down. That is what I wanted. Now, after using two discount rates, I could not get the desired discount rate. Now, what should I do? Should I keep trying this? If I keep trying this, then in the exam, I will not be able to solve any other question except this one. And we will also not be sure whether this will also be fully solved or not. Yeah? So that's why I need to stop now. Kamal is saying, sir, instead of 14, can we take 12? Of course. As I told you, it's only a guess. So you can take any rate. Instead of 10, you could have used 9. Instead of 10, you could have used 15. Up to you. Fully up to you. It's only a guess. Guess can be anything. Okay. Now the problem is that we are stuck. So where do we go? Shall I keep repeating this? The answer is no. I can't keep repeating this. So I need to find some way. But of course, all of these efforts which I have applied cannot go wasted. So I need to make use of these two answers. Let's understand. Now, I'll have to go back to our school. In the school, if you remember, you would have read Unitary method. You remember? Yeah? If one item is of rupees 10, then 10 items will be of how much value? 10 into 10. Or you can say, if two items are of rupees 10, then 10 items will be for how much value? 10 into 10 divided by 2. Remember this method? Yeah? Now this method we need to apply over here. Let's see how. By using a discount rate of 10%, what was the present value which we could get? 2,14,340. Okay. Yeah. Now, to reduce this, what was the objective? Our objective was to reduce this by 14,340. Yeah. Now, to reduce this by PV by 2,14,340 minus the revised PV, the second PV which I got was 192,360. So I'm saying to reduce my PV by this much amount. What was the reduction in PV that I took? 4%. That is 14 minus 10. Is that correct or not? Please listen to this carefully. Okay. I'm saying to reduce the PV by this much amount. What was the reduction in the discount rate I had to take? 4%. Okay. Now, if I have to reduce PV by 1 means only rupee 1 by 1. What is the reduction in the discount rate that I have to take? Very simple. Apply the unitary method. 4% divided by 2,14,340 minus 1,92,360. Simply. Yeah. So for reducing the present value by only 1 rupee, I'll have to reduce my PV by this much amount. Correct? Yeah. Now, taking the base of 10%, wherein I got a PV of 2,14,340. If I have to reduce my PV by 14,340. Yeah, 14,340. Then what is that additional component of percentage that I need to add to my discount rate? Very simply, this into 14,340. Correct? 4% divided by 2,14,340 minus 192,360 multiplying 14,340. So what does it give me? It gives me 0.6%. So that means if I have to reduce my PV by this much amount, what is the what is the discount rate that I need to add to my base of 10? This much. Sorry, this is 2.6%. This is 2.6%. Correct? Yeah. So with this, what do we get? With this, we will get a rate of 12.6%. Which when applied to the installments like this will give me a PV of exactly 2 lakh rupees, and which would indicate my interest rate implicit in the lease. Means these components are what? These are future values. 50,000, 50,000, 50,000. These are what? These are the future values. These are the amounts which are loaded with interest. So if I have to unload all of these amounts such that I achieve 2 lakh on day 0, then what is the discount rate? It should come out to be 12%. Means this arrangement involves an interest component of 12.6%. Clear? Clear on this? How do we compute this interest rate implicit in the lease? So if you have any questions, any doubts, please let me know. Nishi was asking, sir, we can do this. That first we try it on calculating and then do this in writing. I think I understand your point. So first of all, if you have to note down these steps, whenever you will apply trial and error method, you will start with X rate, compute the present value, then you will take Y rate, compute the present value, and then you will follow this technique, which will give you the exact discount rate to be considered for computing the present value. Clear? All of you clear on this? Yeah? All of you clear on this? Any questions, any doubts? In case you have, please let me know. Suggest if you can pick up example number 2 and 3 for your homework. Example number 2 and 3. This starts from page number 1.77. You can also pick up illustration number 1. This is page number 1.81. Okay, so this is your number. Yes, any questions, any doubts in case you have, please let me know quickly. Manish is asking, sir, unguaranteed residual value will be given or not by the lessee. See, unguaranteed residual value is not the one which is guaranteed, so you should not take it. But considering the assumption which has been taken over here, you can also take the assumption, but you'll have to specify that. So she is clear on this. Atul is asking, sir, dissolution is, please explain A and C. A and C means, I didn't understand your point. What do you mean by A and C? And what do you mean by dissolution? Pallavi is asking, sir, can we use this method in exam or we have to use modules formula? See, you can definitely use this technique in the exam. And even if you look at the formula which is given in the module, that is derived from this technique only. Just go to that formula and you will see that it's exactly the same. And that's why I'm saying there are two techniques. Either you mug up the formula, which will be difficult to remember in the exam, and you will end up making the mistakes. Better way is to learn the technique, which will give you the same formula. So it's the derivation of the formula which I have used. Okay, and I would suggest this to be applied, and this will be better. Otherwise, you will forget that. Jamil is asking, sir, in case of 10, I would have taken, instead of 10, I would have taken 15% at the beginning. Then whether after calculating 14 as lower rate, then at the end we have calculated and added 10, would subtract. Of course, yes. Of course, yes. Yeah. Depending on the rates you will choose, you will automatically get the direction. Where do you need to go? Okay. Then I think Rangajwala is asking, sir, in this illustration, firstly we have guessed two rates which give us incorrect present values. Then we have moved to find out the difference between those two, which we worked out previously, but without guessing the second rates. How can we find out the correct rate of interest? See, this is called as trial and error techniques. trial and error technique has to start by guessing two rates. So there is no way that you don't guess two rates and then start on with the technique. That's not possible. Okay. Shivani, all of these things as we have been discussing, you note down all of these points. This is something which will become your notes. And as I have clarified earlier also, that if you want to add something to it, add it on your own. So that is something which will become your notes. I usually think that while applying 12.6%, a difference of rupees 560 is coming in this time. That is because of the fact that we have not gone to the decimal places. When you will compute it, you will have to look into the decimal places. Now, once again, a question may arise. So, how many decimal places do we consider in the exam? Because if we were to do this, say on MS Excel, we can take n number of decimal places, which is possible. But in the exam, we need to limit ourselves to decimal places. So, I would suggest up to 3 decimal places you should go. Don't go beyond that. Otherwise, its calculation will become very complex. You can also cut yourself to decimal places unless it's specified in the question. And because of the decimal places, these small differences will arise, which is absolutely okay. You can ignore that. So if you look at example number 3, I think, let me just see. Yeah. So I think when you solve example number 3, which I have given you for the homework, then you will see that study material has also considered a difference, and which you can easily ignore. But you need to give a note for this, that this is because of rounding off or the decimal places, or because of approximation. Pallavi is clear on this. Yeah, Shivani, I think you need to please check it at your end because everything seems to be fine over here. So she is asking, sir, from the examination point of view, is it sufficient study material problem? I think you are asking about the questions or the practice that you need to do. See, for the purposes of your examination, and this is something which is not limited to this subject. Everywhere, please remember 3 things: study material, past year question papers, and the RTPs. If you cover these 3, it would be. If you are doing anything beyond this, that's not required. These 3 more than enough. Okay. In fact, in this example number 3, if you go, you'll see a note which is given. Yeah, that is for approximation only. Yeah. This is completely allowed to be given in the examination. Alright. So now, the next step will be to move on to the accounting requirements of Lessor. So far, all these accounting requirements that we have discussed were all in relation to the Lessee. So now, before I move on to the accounting requirements of Lessor, which is nothing but a mirror accounting, I'll explain you how. We can go to example number 4 quickly. Example number 4. Yeah, are you on to this? Okay, I think I'm getting some more queries from you. Manish is asking, sir, what is the reason of unguaranteed residual value? Is it because of scrap value? See, the residual value is because of the scrap value. Whether it is guaranteed or unguaranteed doesn't matter. Priya is asking how many classes are more. I think you have got the schedule, Priya. Maybe you can refer to that schedule. I'm not too sure about it. Let us please quickly get on to this example. I'm just explaining you the example because once again this is for you to practice, so I'll not get into its computations, etc. So that's why I need your attention. Please get away from your queries for some time and let's focus on this example. Okay. In example number 2. So if you go to example number 2, facts are quite similar to the facts which are given in example number 1. Except that implicit rate is given in example number 2. In example number 1, you were required to compute this. In example number 2, interest rate is given in the question. Okay. Now, example number 4 says use the same facts. Suppose unguaranteed residual value is not determinable. First of all, take out the unguaranteed residual value. And lessee's incremental borrowing rate is 10%. Now, it's a different term which they have used. One is interest rate implicit in the lease. Something which we just computed. Okay. And now in example number 4, they are not saying interest rate implicit in the lease. They are saying incremental borrowing rate of the lessee. Okay, so it's a different term. I'll come to this term later on. Let's quickly, first of all, understand the facts. This is given as 10%. Since the interest rate implicit in the lease is the discount rate at which present value of minimum lease payments and the present value of unguaranteed residual value equals the fair value, interest rate implicit in the lease cannot be determined unless unguaranteed residual value is also known to us. If the interest rate implicit in the lease is not determinable, present value of minimum lease payment should be determined using lessee's incremental borrowing rate. Now, what are they saying here? They are just simply saying that if in case you are required to compute discount rate, like we did in case of example number 1, you were required to compute discount rate. But what was the name of that discount rate? Interest rate implicit in the lease. For which, what do you need? Question says you need unguaranteed residual value for the same. Unguaranteed residual value, UGRV, unguaranteed residual value for this. So example number 4 is saying in case UGRV is missing, it is missing, then you cannot compute interest rate implicit in the lease. In such a scenario, you will have to compute the discount rate, but that discount rate will be known by a different term, name, that will be called as incremental borrowing rate. The entire technique which we have used in example number 1 will remain same. There is no change. The only thing is, now instead of calling that rate as the one which is implicit in the lease, we will call it as incremental borrowing rate. Now, what is the difference between these two? Let's try to understand these two conceptually. See, interest rate implicit in the lease implies that rate of interest using which lease arrangement has been structured. Whereas incremental borrowing rate is the rate for the entity, for the lessee as a whole. It is not specific to the lease arrangement, but practically when you will see organizations use this rate. Practically you see organizations using this. In fact, this is more commonly used as against this one. Okay? Yeah? But in the exam, you need to apply this according to the approach we have discussed. Understood? The remaining entire part remains same. You will have to first of all compute the discount rate. Using the discount rate, you will have to compute the present value and then you will pass the accounting entries. Everything else remains the same. There is no change except this. Yeah? Let me just go to your queries now. Priya is saying that the schedule is not updated. I'll request the team to get this updated because I'm not too sure about it. Okay. Jamil is asking, sir, can you please explain the journal entries? See, journal entries we have already discussed. And for your purposes, when you will go to these examples, you will have to pass those journal entries. That is when you will get more clarity, when you will pass it on your own. First entry for the lessee will be what? Let's quickly recap. Asset on lease debit to lease liability. And present value of MLP or fair value of the leased asset, whichever is more. Then, at the year end, what will you do? You will depreciate this asset. So, depreciation debit to asset on lease. And you will build interest on lease liability, interest debit to lease liability. And then you will pay installment. Lease liability debit to bank. These three entries, depreciation, interest, and installment payment. They will keep going on till the time lease term is not over. Yeah, that's it. Very simple, easy to understand. Okay, clear on this? Jamil, you are clear? This example number 4 is clear to you, so this also becomes your practice question. I'm just hoping that you are all clear on this. So if you have got any questions, any doubts around whatever we have discussed so far, please let me know. Because I plan to start with the accounting of Lessor in the next session. Because I don't think there will be any point touching upon the concept. Because the majority part we will be able to cover in the next session. And in the next session, we'll also start with another accounting standard, most likely AS20. Earning per share. Okay, yeah. So now, before we end our discussion for today, quickly, if you have got any questions, any doubts, please let me know. Please understand that this is a very important chapter because a lot of practical questions can be drafted from this. Yeah. So, from examination point of view, from the perspective that if the examiner wants to draft long practical questions, then this will be one of the standards we can pick up. Yes, from that perspective, this is important. But at the same time, this is interesting also. And this is something which is very, very relevant. Any organization will have leases. And therein you will be required to do this assessment. Okay. Jamil is saying, but sir, I was confused with example number 4. I was not getting what exactly question was about. But now I am clear about it. Very good. Very good, so if you're clear about it. If you want any questions or anyone else has got any other question, please let me know. But please remember that when you will start doing this homework, you need to make sure that you revise this first. Only when you revise this first, then start with the questions. Otherwise, you will find a bit of challenge in solving these. Yeah. So if you revise once, then of course all of these homework questions which I have given to you will become very, very simple. Okay, yeah. So this, if you've got any questions, we can discuss. Otherwise, we can conclude our session for today. She is saying, no, sir. Rupasmita is saying, sir, what's the difference between hire purchase and lease? Effectively none. In fact, AS19 covers hire purchase also. Yeah, AS19 covers that. So effectively, I would say not a significant difference. Huh? Largely same. Any more questions? Any more doubts in case you have on this? Sakshi is saying, sir, I have got doubt on page number 115. Okay, tell me what is this regarding? I think it's on deferred tax. Illustration number 4. So Sakshi, it will be great if you just specify your query, huh? Because it's a general query. Maybe what you can do is you can just put down your query right away in detail. What exactly has been your doubt? Huh? I'll just go through your query and maybe in the next session we can come back and we can have a discussion of this. Alright? Because as of now you have just written the illustration. So this full illustration we won't be able to solve it now. Yeah, Kushi is clear on this. So I think with this we are done. And I'm just hoping that you are appreciating all of these concepts. You are finding this easy because accounting standards are very easy if you understand the concept. Alright? Yeah. So thanks to you once again for your time and for your wonderful participation. Thanks so much.